Hello traders, Cory Mitchell here, TradeThatSwing.com. This is your swing trading stock market outlook for the week of September 2nd. If you're in the US or Canada, hopefully you're having a good day off. We got a shortened trading week this week. Each week I go through the same process. This is going to be a pretty quick outlook. There are some watch lists out there. This one I'm going to be updating. Best swing trading stocks watch list. It is just high momentum stock names. I'll be updating that one. The current swing trading watch list was updated a few days back, and I'll be updating again during the week. Let's get to what's going on with the markets. We have the NASDAQ, the S&P 500, the NYSE Composite, the Russell 2000, the Canadian Index. It's really been tearing as mainly due to gold and commodities doing well. So I'm noticing this. We are still in an uptrend. There's nothing to indicate we're in a downtrend or anything, but I am noticing the flatlining. I've also noticed it in more stocks recently. That's kind of part of the feedback mechanism for my trading. I look at the trades, how are they performing? There are times when things are just running and it's great, and then there are other times where we enter and things are a little bit more choppy. That seems to be more what I'm noticing lately. You get the odd runner, but a lot are kind of reflecting what we're seeing in the indices, especially the NASDAQ and the S&P 500, kind of flatlining especially the last month. We had this, a high there. We pull back a little bit. We move back up. And yeah, so just like these little rangy areas, and just something to be aware of. The NYSE Composite doing pretty nicely, uptrend. Just got above those prior highs, the Russell 2000. So it's not bad. It's just, is it perfect? No. So I'm, just backed off slightly from being very aggressive. When we had things just running really high, relentlessly higher back here and here, that was the time I like to be really aggressive. When things slow down, then I'm not as aggressive. Bitcoin really faltered here. So you can see there was a prior range here. It broke above it, pulled back, held it, moved up, got rejected at the prior high, and now it's back in this old range. That's not uptrending behavior. Uptrending behavior, you want blocks building to the upside. Sometimes you get a big runaway and then it forms a range or a pullback, but we don't really like it when this is pulling back into prior ranges, because then as this drops, more and more people get scared. There's stop losses down here. So, as it starts to creep down, people start selling, it can have a bit of a snowball effect. And yeah, so I don't like this. This has to get back up into this area, start showing some resilience up in this old box again before I would even consider getting long again. And if it keeps breaking down, then we could have an entry point much lower. I don't know what that will be yet, but I don't like it. Doesn't matter if it shoots higher from here. I don't like the setup. Gold miners have been very strong. We've talked about this. Even though while gold was ranging, the gold miners had broken out and were running out of this rounded bottom pattern. So that was good for the industry overall. Now gold trying to catch up, may get the breakout of its own range. But either way, the gold stocks are doing really well. And that's, if you're trading gold stocks, that's what matters. Let's look at the market health indicators. This tells us what's going on underneath the hood. A little bit of a zoomed in version of a little bit choppier trading we've had recently. Volume, not important to me at the moment. The rate of change, that's simply volatility. Daily volatility of the S&P 500. 2% daily drops are a big warning sign. We haven't had any. We're in a pretty low volatility environment, and that is correlated with uptrends. advanced decline line, advancing stocks minus declining stocks is a cumulative number. It's just moving up, so that's good. That's favorable. Uptrending type behavior. This one, it's not actually relevant at the moment. I have a smiley face beside it, but it should actually be a neutral. It's not important. This is more important as price is declining or near potential turning points when we get big volume spikes either higher or lower. But this is up volume divided by total volume. So it basically shows, how much of the volume occurred in stocks that were moving to the upside or downside. And at this point in time, we're in an uptrend. It's not really relevant. What would be relevant is if we started seeing really big selling days or limited upside volume. So if it was way down here, that would mean 10% upside volume, or the flip side of thinking that is 90% downside volume. So 90% of the volume that occurred during the day occurred in stocks moving to the downside. That's when you'd get a reading way down here. That would be a sign of, some selling coming into the market and potentially step aside. Percentage of stocks above their 50-day moving average, right around, for the S&P and all U.S. stocks, it's right around 63-64%. So that's not bad. We've come off the 50% level and we're just kind of hovering there. So overall, still pretty good. Just this little bit of flatlining. So what am I doing right now? Looking for long stocks. I'm not being overly aggressive. We're this uptrend's been going on a while and we don't know when it's going to end. I don't know when it's going to end. Things, for the most part, are still okay. We're just flatlining a little bit, as I said. Gold remains a bright spot, the gold and gold stocks. Nothing in Bitcoin currently. I just don't like that it broke down below that range, so we would need to claw back up into that old range for me to get interested again. And otherwise, if it keeps dropping, hey, we'll get an entry potentially down the road at a lower price. So that's your weekly outlook for stocks. Have a great trading week out there.